welcome to the latest edition of the All In Skills podcast, the podcast where we talk to interesting people with interesting careers. And today, I'm going to be talking to Ricardo Josua. Hello, Ricardo. How are you?
Hey, Mr. David, how are you? Good to see you.
Well, and Ricardo, you're not in the same country as me, are you? Where are you?
I'm calling from São Paulo, Brazil.
Can you tell us a little bit about who you are and what it is that you do?
So I was born in Rio de Janeiro, grew up in a middle-class family, went to school to study business administration. I wanted to study history, honestly, but I guess pragmatism won that battle for me. And I think in Brazil and most developing countries, those choices are very consequential. So we try to balance out something that makes you enough money to not depend necessarily on the government. So I went to study business administration, got my bachelor's degree, did a bunch of internships, ended up working for somewhere that I thought I would never work for, an investment bank of all things. And it was as bad as people say. So I stayed there for 3 years, learned a lot, and sort of endured a lot, for my personal taste. But it was a good opportunity, working long hours with a bunch of smart people, doing things that I was not particularly interested in. After that, I left and helped my dad sell part of a company he owned to a private equity company. At that point, he had a telemarketing company in Brazil. And in the late 90s in Brazil, we had privatization process of telecom. And that garnered an explosion of demand for telemarketing services.
You made the choice, I think you suggested or implied for pragmatic reasons, that to study business administration. At any point since then, have you sort of regretted not studying something which perhaps would have been more for your academic or intellectual pleasure?
I did, after I graduated, when I was working in this company that I was just about to mention now, I did go back to school to study pedagogy, to study education. It was an amazing experience. My first experience in college was very unlike what you see in movies, and I'm assuming different from what most of your viewers have experienced through college. I was working from day one, half period, and then full day, and then studying at night. So I barely had any experience with college, campus life or anything like that. And as I said, the subject matter wasn't that interesting to me or challenging or entertaining. But when I went to study education, that changed, completely. I really, really was super engaged. I was a sort of A+ student in every course, loved everything that I was doing. I was working long hours during the day, went to college at night, started at 8 p.m., ended every night shy of midnight, got back home and woke up the next day at 6. But I was always eager to get, to college and see what was up, reading all the materials and having a blast. So answering your question, after a few years, one of my teachers said, you shouldn't be doing undergrad studies. You already have a bachelor's degree. You should move to a master's degree here. And I'd be happy to take you as my student. So I did go through the exams and ended up studying with this teacher on economic policies for education, which was something that I was super interested in. But at that same time, this was the early aughts, my wife got pregnant of our first child, and my professor said, listen, you have to make a choice. You cannot make it by coming late at night and doing weekends. You need to get more involved. You need to supervise classes and do other stuff. That won't cut it. You have to do it. And I said, yeah, sure. But how do I get paid? And he said, well, there's a scholarship for you. And the scholarship, this I'll try to translate in Australian dollars or dollar terms. It was at that point 1.3 thousand reais, so 1,300 reais, which would translate today at inflation and everything. Maybe it would be like 3,000 reais, which would be like $500 a month, $600 a month. So barely a livable compensation for me. So I gave up and I said, listen, I can't do it. And I dropped it, even though I really, really, really loved it, and went back to business. That's not a very pleasing story, but it all ended well. But that was the.
It's come up in previous conversations I've had with other people about this dilemma, perhaps what you're confronted with, of doing what you love, which some of my guests have actually suggested is the most important thing, because if you do what you love, you'll do it well, and doing what is expedient. Do you feel that you sort of ended up doing what was expedient, or you found a way of reconciling your passion with your practicality?
No, I never did. And listen, I have this idea about reflecting on your own experiences and giving advice based off of it, that we don't know. We just get to live this one life. There's no control groups. There's no separation from causation and correlations. We do stuff, we see what the results are, and we never can know for sure what happened because of something, despite of something, or independent of something. And I think that's true for me through most things that I've done. Very hard for me to separate every time I think about it. There are some universals, and of course, you have to work hard if you want to, do well. That's pretty universal. I've seen exceptions, but those are only things that confirm the broader thesis, which is pretty obvious to everyone, I guess. So I never reconciled that. I complained about my job for most of my life. I didn't like what I was doing most of my adult life. And I still managed to do pretty well. Sold a couple of companies. My last company sold for $1 billion. So it all went well. I mean, it couldn't have been better in terms of financial return and security for my family. But did I have a blast doing it? No, but was it miserable all the time? Of course not. You get to find comfort and joy with people you work with the camaraderie, with, getting through stuff, with getting things done, with getting recognition. So I don't think you need to, well, I think I'm a living proof that you don't need to love what you do to be successful. It might be easier. I will never know. Or maybe not. Maybe you have the separation and I got to get home and play my guitar or, spend time with friends or do whatever I wanted. And that was enough.
What you're saying brings to mind Andre Agassi's autobiography, where he reflects on his career in tennis.
Exactly. I think, by the way, that was something I mentioned a lot, right? I think he did what he did, I think, to some extent because of his parents' pressure, if I recall correctly. But this was very intentional from my part. I wanted to have the security to pursue things I wanted to do, and particularly to do things that I wanted to do without having to be compensated for it. As you know, I wrote a novel, which didn't sell well, doesn't matter, but I really wanted to do it. And I'm happy that now I can do it again without having to be concerned what the reception will be for it. If people like it, great. If they don't, I don't honestly care that much. Even for my personal vanity, to be honest. I think, I've having in a capitalist society here in São Paulo, particularly, having succeeded in business gives me a lot of, several degrees of freedom to do stuff because people assume I'm very bright because I made money, which I don't think is necessarily correlated that much. I mean, you need to have some level of intelligence, but I certainly don't believe that this is a good indicator for success or vice versa. I think there's a lot of people I know that are not particularly smart, but are very driven and very serious and very disciplined, and that managed to do well. And I, of course, know many more people that are brilliant, but do not have the desire to, work for money or make money, or maybe even don't have the discipline or the people skills to get there.
But let's return then to your career track. So the investment bank, I think you said 3 years in the investment bank. Is that right?
Well, my experience in investment banking was late 90s. So for those who never read about it, it was a less glamorized version of Wolf of Wall Street kind of world. Very masculine, yes, but very toxic, very aggressive, but also same thing. Great friends, camaraderie, a bunch of people, and felt the pleasure of being accomplished and even making money. Making money is a form of accomplishment, especially in this world of ours. So, but I did leave. It was too much for me, so I left. I helped my dad get funding for his company because I thought I could potentially help. I don't know if I did or not, but my father took me in. And when we finished the deal, I was there in this telemarketing company saying, "Oh, this is not how I planned it. So now I got the investment. What do I do?" And he had this project to build a credit card company, processing company, because he has some experience in it. And I invited a former superior I had at the investment bank, and he joined me to build up this credit card processing company from scratch. And we did it from 1999. I spent 13 years there, so till 2012. And again, not something I loved, but something I managed to do reasonably well.
How competitive was that space in Brazil at the time?
Not a lot. We had in-house solutions running in some banks. We had one large competitor in Brazil, which was a listed company, much, much, much larger. But everyone was running the same software, which was a US software called Vision Boss. Those, but it was a very specific software that required a lot of computing power to run and required mainframes and stuff like that. So what we did is we built something with the same capabilities, but for smaller portfolios that could run on Windows servers, essentially. So that was the proposition. We started with smaller portfolios with retail cards, and then bank cards went all the way up. It was a good run. I think at that point, Brazil didn't have access to inexpensive capital, so there was no investment. So it was largely bootstrapped. We started with $200,000 roughly of investment from the company. Then we sort of bootstrapped the rest. I left the company in 2012. It was sold to a private equity company in 2014. I was not working there anymore, but I still had shares, so I made my first sort of financial cushion. So I had some reserve for the first time, and then started a bunch of other stuff. I started a financial services company with a couple of partners. Started a business in consulting. Started a business in ad tech for a while. Did that, and that was a blast, by the way. Going back to work with education was an amazing experience.
Starting businesses in Brazil's massive economy, really massive population. How receptive is it to innovation? How receptive is it to new ideas?
It's changed a lot since I started. I think back in '99, when I started my sort of helped start the first company, co-founded the first company, it was essentially non-existent. There was no room for innovation. There was no startup culture. We didn't even use the word, I think, at that stage. Of course, when I started my latest company, things have changed completely. There was a very lively ecosystem, a lot of talented people working for it, people that left stable jobs in corporate employment to start new companies. And I think critically, there were, for the first time, a lot of institutional investors and angel investors sort of willing to invest in ideas that were not ready to launch necessarily, or were barely enough to launch. It did take a while, but I think now today, Brazil is a very dynamic economy with the startup community. Of course, we do still have developing countries woes. We have very high interest rates. We have legal framework that doesn't help smaller companies. Setting up companies is hard. Labor costs are extremely high, and hiring and firing is very complicated. There's all kinds of things that you would associate with, I think, in most developing countries, but it's much better now.
Years ago, I remember reading a comment by, I think it was a Brazilian industrialist, I may be wrong, but they said if Microsoft had started in the garage in São Paulo, it would still be in a garage in São Paulo after, 20, 30 years. Presumably, though, he's reflecting on, as you say, a very different investment culture and attitude towards innovation and new ideas at that time.
It's changed a little, right? We now have several Brazilian unicorns. Some of them are very local, so even if I mention the names, they won't resonate. But we have the largest fintech in the world today, maybe behind Stripe, the second largest, which is Nubank, which didn't start in a garage, started with venture capital investments. And of course, the garage thing is obviously a very sort of embellished version of whatever happened there. We'll never know. So, yeah, I think things changed, but you don't see a lot of conversion. I think there's a lot of people who try and fail to get forward. And I think things have, again, changed for the worst in very recent years because, between 2020, 2013 or 14 and 2021, we had interest rates in Brazil that were comparable to those in the US. So we were able to get access to capital. We had like 4% annual interest rates, government interest rates. And now they're up to 15%. very hard to compete with that. It compounds very fast, makes everything very hard to accomplish. So I don't know about this quote of yours, but I do think that if Microsoft or OpenAI, for that matter, started in Brazil, I think it would be very hard to scale up, very hard. Access to capital is critical. I think we have the talent. I think everywhere has a talent, right? I think there's the distribution of talent, regardless of education and regardless of Stanford and Harvard and everything. I think or Oxford, uh, talent is roughly evenly distributed, I think. So, and by the way, you can see that in the US, for example. I deal with banks and have dealt with banks in most countries, even the last few years. And you see Indians everywhere. You see people from Brazil, Singapore. The talent is very evenly distributed, I think. But access to capital, the right frame, government and legal framework, clear rules, stability, those things will matter a lot. Inflation, all that.
You mentioned several things that you started. Which of those took off?
Well, the first one that I helped start did take off and grew a lot and was sold for a significant value. I had, by the time I left, I had a small percentage, but still made some money. That was relevant. The other ones, a few just sort of dwindled away and, just never happened at all. Consulting businesses, things that didn't have a lot of operating leverage that depended on my work. When I stopped working, they just sort of died off. But the education thing, we managed to sell this tool that we developed to two education groups in Brazil. I didn't make any money out of that, but that was very fun to work for anyway. So I think I remember saying very earnestly at that stage that I had found finally, and I was maybe 40 something. And I said, I finally found stuff that is worth failing at. That was very good experience. So it didn't matter as much. I think the stakes became much. It's interesting because you would think that if you're doing something that you love, the stakes would feel higher, but it was the exact opposite. I believed so much in what I was doing then that it didn't matter if it worked or not. I could work every day and I would sleep at night soundly and say, if it works, it's great. And I think it will. But even if it doesn't, it's not my fault. I'm doing all I can, and it's going to be a loss for the world, not for me. When I was working with stuff that I didn't love as much, the stakes were much higher. I was, oh my God, I'm spending time I could be spending with my kids, with my wife, with my friends, with myself, doing things that I like, studying, reading, doing whatever. And I'm here day after day, hour after hour, getting late calls and doing all-nighters. If this fails, oh my God, will not have been worth investing that much time. I think that is very risky. It worked out for me. I wouldn't recommend it. I wouldn't want it for my kids, for example. If they wanted to do well, I want to be very super pragmatic. I want to make some money and I'm going to work in something that I don't like. I wouldn't recommend that path necessarily. I think you should try to find a balance if possible.
Two of these businesses you mentioned that you did after the sale of the other company you had a stake in. One was EdTech and one, presumably, Fintech. You've already mentioned how you felt in terms of the attitude toward the project you're working on. But as far as the ecosystems are concerned, how was that?
Completely different in good and bad ways. In education in Brazil, it's largely public education. We do have a sort of very large private education ecosystem, but it's still largely public. I think governance is still much less sophisticated than it is for other businesses. There's a lot of people that work for the passion and work for the love of it. But again, there's a lack of pragmatism. There's a lack of efficiency in many cases, and things that would benefit the system, I think, as well. But it's a very hard nut to crack because you don't want to have only shareholders' interests driving education. I think most ed tech initiatives have failed to scale because it's hard to convince, that we've done that for healthcare in some countries. It didn't go well. But I think it's worth trying. And I think, I now know and even advise some companies that are ed techs in Brazil. And I think they're finding a very nice balance between doing things that are very virtuous by nature and things that are actually helping people, and managing to do it in a sustainable way, making money. But hardly and here's my cynicism might not be warranted, but I feel that to some extent, there is an inverse correlation between value of what you're doing, your clear value of what you're doing, and the amount of money you can make out of it. I think you start making concessions, you can make more money. So it might be a cynical view. I don't know if you share it, but I think it's harder to make money in education, but it's not as important because I think if you're working for finance, of course, you can say, I'm democratizing access. There's always potential benefits or trickle down effects, but it's less clear. It's much less clear. I think with education, you see the impact, and it's very fulfilling. It was for me at least.
And with the fintech company, the fintech startup, was that something that an idea you'd come up with, or do you find a like-minded group of people that you thought, okay, this is going to be like a fintech passion project?
Yeah, I think this is only from my personal experience. It's anecdotal, so I don't know if it applies more broadly. I think when I do interviews on fintech, especially when I was still running the company, I wouldn't say embellish the story, but we tribute some ideals. And I think we were forced to do that in this last company because the venture capitalists want to know what's the sort of loftier goal you have for this business. So you had to come up with that. But again, in my experience, everything that I've done was largely opportunistic. I mean, you have a worldview and you have some skills that align or some expertise in some field. And then, you talk to like-minded people, you find out if that is actionable, you try stuff and you pivot a lot. I think most companies, most startups that I know of pivot a lot. They start with one idea and they find out that's not exactly this. And I tell my daughter now, she's trying to start her first business, and I tell her, give you room to fail because it's very hard to know beforehand. You have to be in there to adjust, and action beats ideation. I think 100 to 1. Very hard to come with complete ideals and then follow them. I think this is, a myth. I've never seen it in practice. I've heard people say they've done it. And in the few cases that I was able to see the journey from up close, yeah, it's people keep adjusting, and maybe the general idea remains, but you have to adjust to opportunities to some extent.
The company that you established then in fintech, how rapid was its growth, and how much did it stay within Brazil, and how much was it about sort of looking outwards?
It was the height of the fintech craze. So we raised a seed round of about $1 million, if I'm not mistaken, and then in 2 years we were raising a Series A, and then in another year we were raising $100 million. So it was very, very fast. We started with Brazil operations. We soon started selling to enterprises that were concerned that they were not innovating fast enough. And then so my investors wanted to do a Brazil/Latam deal because their funds were investing in Brazil/Latam companies. But I was very adamant in this case, saying, listen, there's no Latam outside of geographical proximity. We are close to Colombia and Argentina and Chile, but outside of that, there's no commonalities. Mercosur doesn't matter for those kinds of services. So there's no reason we should bundle this. I mean, if I want to go outside of Brazil, spending energy to expand to Ecuador or the UK is not necessarily different. I mean, the markets are different, of course. One is more competitive, the other is less, but the money is also completely different. So I pushed very hard to hire someone in the northern hemisphere, and I ended up hiring this gentleman in the UK. And it turned out to be a sort of a good choice. And again, we'll never know how much chance played a part in it, but it was important for us. It was crucial for us. We started getting clients in the UK and then Europe and Asia. Now I think we're in more than 16 countries. I think what would she like 21 countries. It's grown outside Brazil significantly.
Did you go into that fintech enterprise with a clear exit strategy?
Not at all, not at all, and nor I think I don't think it's wise to do it. The journey can be very long. It can take several years. It can take decades. So if you want to do it for a quick exit, I think you're bound to be disappointed. I think there's a high risk of disappointment. So you need to be there and know that it's a very long term thing. Of course, given the nature of the capital that we got from venture capital, I think there's an expectation that at some point you either IPO or sell to a strategic player. Mostly IPO at that point, I think was the expectation. So you would still remain as a shareholder, but you would allow the capital investors, the venture capitalists, to sell their shares in the public market. I think that was, I guess, the view of what would happen to the company in the future. But we didn't know, and we didn't know when it would happen. Right? We were growing, and the mantra for startups is, you have to grow 10 times or in a period of a few years. So you have to more than double every year, which is a challenge in itself. But of course, with capital, it makes it much easier, right? So we did use the capital to grow very fast and set up things that would be inconceivable for my first company, for example. My first company, we would invest 25 to 30% of net income every year. So whatever we got, we distributed a few bucks to investors, and then maybe take 25, 30% and reinvest in the company. And this time around, we were burning capital and raising more, as long as we could prove that we were growing consistently. So it's a different nature of pressure. And of course, it also is a very make or break kind of proposition. Most companies don't get the luxury of saying, "Oh, I'm going to become profitable and just make a few $1,000,000." If by the time your Series A comes due, if you're not making, I don't know, $10 million a year or something, there's no moving forward. And then, of course, the next one has to be at least 20 or 30, and so on and so on. So you are pushed to either grow very fast or break. I don't think that most investors, either in private equity, but specifically in venture capital, want you to become a healthy, mid-sized business that doesn't help anyone in that case.
How do you occupy your time nowadays?
So I'm a special advisor to the company that bought my company. So Visa bought Visa, like the company that I founded, and they have been great. I was CEO for the first year after the acquisition, and then I moved to a advisory position. So I do have more free time now. I confess that I expected that, as I think is very common, and I was aware of this. People, would tell, "Oh, you're going to be bored, and you're going to need to do stuff." And I said, "Listen, I have so many hobbies, so many things that I wanted to do that I've always wanted to pursue, and I never had the time to do it. And now I think I will." And I did it for the first maybe 6 months. So I took painting class, drawing classes, and guitar lessons, and traveled a little bit, spent more time with my kids, went to the pool in the middle of the day. But yeah, it gets tired, I think. I'm sad to say, I think, and it might be because of the nature of the societies we live in. Very hard to be. Maybe if I had dropped out and moved to sort of a farmhouse somewhere in the remote areas of central Brazil and sort of started tending cattle or whatever, I think it might have been different. But here, if you're in a bustling city with everyone hustling and sort of trying to make ends meet, and you have friends and family, everyone working all the time, very hard to be idle, or to be more idle than you're used to, that effect. So I don't know yet. I've been a special advisor for the last 8 months. I still am sort of committed to the company, so I cannot start a new business or anything like that. But I have been mentoring people. I'm part of a global network of entrepreneurs called Endeavor, and I provide mentorship through that for whatever it's worth. But I think it's therapeutic because it's good to have even through my cynical eyes, a hopeful view, that things eventually turn out well.
Can we expect a second novel?
I met my editor yesterday, actually, and I am sitting in front of my computer here. I have a screen to my right, and I'm scared to death to send the manuscript. I have a 450-page manuscript, and it's a funny story that you might remember. When I left my first company, I moved to the countryside, and I published a novel that I had written through the years. But for a year, I focused on writing a second novel. When I finished it in 2012, I called my editor and said, listen, I have a second book already. Do you want to take a look at it? And she said, what is it about? And I said, it's a pandemic scenario where three guys that met in a summer camp have to meet again, and two of them have to drive to the interior of Bahia in Brazil, from Rio to Bahia, to meet during a pandemic. And said, what kind of pandemic? I said, a virus that actually came from a Chinese lab. I'm not even kidding. And she said, interesting. We do not, and I spoke to her yesterday, and you can fact check if you want. And she said, we don't publish sci-fi. And I said, yeah, well, thanks for that. So that never came out, and it's kind of a family anecdote these days. But I don't know, man. I'm asking you honestly, does the world need another, 50-year-old white male rich guy book, ranting about the state of the world? I don't know. I feel a little self-conscious about these days. So I might publish, but I might do it for just friends and family.
Ricardo Josua, it's been an absolute pleasure. Thanks for your time.
Thank you, Colin.